Hey everyone, welcome back to Corporate Decoder, the place where we break down the complex world of corporate finance. And sometimes things get a little bit hairy, but today we've got a filing that shows a company trying to navigate some pretty choppy waters. So buckle up because we're diving into today's report. All right, so today we are looking at EvoAir Holdings Incorporated Q. It is a quarterly report, meaning we get a snapshot of their financial health over the last 3 months, in this case ending on the 30th of November 2025. Let's kick things off by looking at what the company owns and owes. On the 30th of November 2025, EvoAir Holdings had total assets of about $45 million. Now that might sound like a lot, but it is actually a bit less than what they had at the end of August 2025, when they had around $45.7 million. The biggest chunk of their assets is this thing called technology-related intangible assets, which is over $40 million. Think of these as things like patents and trademarks that have value, but you can't exactly touch them. But here is where it gets interesting. Their cash and cash equivalents, the money they have readily available, dropped from about $93,000 to just over $74,000. So they are definitely spending money. Now let's move to what they owe and what is left over for shareholders' equity. Total liabilities are around $3.5 million. A big piece of that is something called amounts due to shareholders, which is nearly $2.8 million. This could mean they borrowed money from people who own shares, or perhaps the company owes money to its owners. Their total shareholders' equity is about $41 million. This next section is where we see how much money they made and how much they spent over the last 3 months. For the 3 months ending the 30th of November 2025, EvoAir Holdings brought in just over $20,000 in revenue. Now that might sound incredibly low, and compared to the same period last year when they made almost $52,000. It is a pretty big drop of 61%. Their cost of revenue, which is the direct cost of making their products, also dropped significantly from about $90,000 last year to just over $22,000 this year. This drop of 75% is mostly because they produced less and material costs went down. Because their costs went down faster than their revenue, they actually had a smaller gross loss. Last year they lost about $38,000 on their core business, but this year the loss was much smaller at just over $2,000. So while they are still losing money on what they sell directly, it is a lot less than before. However, when you look at their total operating expenses, which include things like salaries, marketing, and general administrative costs, it is still a huge number. They spent over $1 million on operating expenses in the last 3 months compared to over $4.6 million last year. That is a massive 77% decrease. This big drop is mainly because they spent way less on general administrative expenses, which includes things like stock-based compensation and professional fees. All of this means their loss from operations before taxes actually improved dramatically. They went from a loss of over $4.6 million in the same period last year to a loss of just over $1 million in the most recent quarter. That is a huge 78% improvement. It seems like they are cutting costs everywhere they can in hopes of turning things around. Now let's talk about cash. Cash flow tells us where the money is actually coming from and going. For the 3 months ending the 30th of November 2025, they used about $34,000 in cash from their operations. This is actually less cash used than the same period last year when they used about $41,000. But they also spent over $15,000 on investing activities, which was mainly for buying property, plant, and equipment. They did not spend anything on investing activities last year. And then there are financing activities. They used over $2,000 for payments related to something called hire purchase. Last year, they used about $2,300 for this. Putting it all together, their cash went down by about $52,000 in the last 3 months. This is a bigger decrease than the $43,000 drop last year. Their cash balance at the end of November 2025 was about $74,000. This is a pretty low amount, and when you consider their total assets are over $44 million, it shows a big disconnect between what they own and how much cash they have on hand. Diving a bit deeper into the company's story, we see that EvoAir Holdings incorporated as Unex Holdings Incorporated back in 2017. A key moment happened on the 20th of December 2021 when they entered into what is called the EvoAir International Share Transfer Agreement. This basically means they acquired EvoAir International Limited, which is involved in research, development, manufacturing, and selling heating, ventilation, and air conditioning or HVAC products in Asia. A critical event for this company was a reverse stock split. On the 11th of September 2024, they effectively combined their shares at a 1-for-4 ratio. This means for every 4 old shares, they now have 1 new share. This is often done to boost the stock price or make it more attractive to investors, but it does not change the overall value of the company. The company has a whole network of subsidiaries across different countries. They have entities in places like Singapore, Malaysia, Cambodia, China, and the British Virgin Islands. This structure can sometimes add complexity and make it harder to track where money is going and where profits are being made. This is a really important note, and it is often a red flag. The report states that the company's financial statements are prepared assuming it will continue as a going concern, which means they expect to stay in business. However, it also says they have not yet established a sustainable ongoing source of revenue sufficient to cover their operating costs. They have a massive accumulated deficit of over $55 million and a significant net loss. To tackle this, they have a plan to expand their HVAC business, grow geographically, and diversify revenue streams. They are also looking to raise more money and are preparing to get listed on the Nasdaq capital market. Looking at their equity, we see a lot of activity. They've had various share issuances for services, investment, and referrals. The reverse stock split significantly changed the number of outstanding shares. As of the 30th of November 2025, they have about 27.18 million shares outstanding. The company operates in several countries and each has its own tax laws. For example, Singapore has a 17% corporate tax rate, Malaysia has 24%, and China has 25%. However, because the company has been consistently losing money, they have not recorded any income tax expenses. They also have substantial net operating loss carry-forwards which can be used to reduce future taxable income, but these might expire if not used. They have operating lease agreements for office and factory space. They recognize these as right-of-use assets and lease liabilities on their balance sheet. They also entered into a lease modification in January 2025 that reduced their leased factory space and resulted in a small loss. Now let's shift to what management has to say about everything. They are being very clear about the risks involved and the need for more funding. They acknowledge the significant losses and the fact that they are not yet profitable. Their strategy hinges on growing their HVAC business, expanding into new markets, and diversifying their customer base. They are also aiming to uplist to Nasdaq, which could open doors for more capital. This is a critical period for them, and they are clearly laying out their plans to survive and hopefully thrive. This part is about how the company manages its information and makes sure everything it reports is accurate. They've admitted that their disclosure controls and procedures were not effective as of the 30th of November 2024. They pointed out a few key issues. First, they do not have enough accounting personnel experienced in US generally accepted accounting principles, or US GAAP. Second, they lack sufficient written policies and procedures for accounting and financial reporting, leading to an inadequate financial statement closing process. And third, they have a lack of segregation of duties, a lack of audit committee, and insufficient independent governance or oversight. This is pretty serious and highlights major internal control weaknesses. They are taking steps to fix these issues by hiring consultants, strengthening their accounting team, developing policy manuals, and planning to establish an audit committee. These are crucial steps for any company aiming for long-term success and investor confidence. Finally, on the last page, we see a list of exhibits. These are the supporting documents for the report, like agreements and amendments. It is a long list and it shows the many agreements and transactions that have shaped this company's journey. So what does this all mean? EvoAir Holdings Inc. is in a clear turnaround phase. They have a business with potential in the HVAC market and they are actively cutting costs and seeking ways to generate more revenue. The fact that they are still operating with such a low cash balance and significant accumulated deficit is concerning, and their ability to secure additional funding is absolutely paramount. The weaknesses in their internal controls are also a big concern for investors who want to see transparency and strong governance. It seems like they are trying to survive and build for the future, but it is a long road ahead with many hurdles. They are banking on their strategic plan for new products, new markets, and diversification to get them out of this tight spot. The potential Nasdaq listing is a big gamble, but could be their ticket to much needed capital. Alright, that is our breakdown of EvoAir Holdings Inc. Its latest filing, what is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. And remember to join our Discord community linked in the description below for more exclusive content and discussions. Thanks for watching. See you next time.